Welcome back to the channel. In this video, we're diving into the weekly market forecast, breaking down the key zones, trends, and setups to watch. Let's get straight into the charts. All right, so we're looking at gold on the daily time frame. Up here, we've got a clear high, and down here, another obvious high. These are the two key swing highs that stand out right now. Now, if you look closely, price came back and retested this previous high right here, turning it into support. That retest is pretty significant because it tells us that buyers are still interested at these levels. Then moving lower, we can see a series of lows. First a low, then a lower low, and finally the last lower low. After that, we see price starting to shift upward. This kind of price action suggests that momentum could be turning, and we might be setting up for a potential bullish move. Now, is this guaranteed? Of course not, but based on structure, the retest, and how price is starting to react, it's a good idea to keep an eye on the bullish side. So now let's scale down to a lower time frame, like the 4-hour or 1 hour, and see if we can spot a clean structure or setup that gives us an opportunity to get involved in the move. We're looking for things like break of structure, retests, or even signs of accumulation to confirm our bias. Now, this is how price action is looking on the 4-hour time frame. And from what I'm seeing here, it makes sense why price might continue pushing to the upside. We've got a nice structure forming, momentum is slowly building, and the market is respecting previous support zones. So, from a higher perspective, the bullish bias is still valid. Now let's drop down to the 1-hour time frame and see how things are shaping up. Down here, we can identify what I'd call our risk entry zone. This would have been a nice early entry point. But at this stage, if you're not in already, we'll need to stay patient for a better setup. We've also got this level up here that could act as resistance. If price manages to break above that zone and give us a solid retest or some kind of confirmation, that could open up a clean opportunity to enter long and ride the move to the upside. But here's the thing, we don't control the market. Right now, price is moving a bit funny, kind of choppy, and this area here might even drag price back down temporarily. That's why patience is key. We wait for clear confirmation, not hope. Once the market gives us that green light, then we look to participate with confidence, not guesswork. All right, now let's take a look at Nasdaq. We'll start on the daily time frame. So right here, we've got this clear high sitting at the top of the range. And based on current price action, it looks like the market wants to push up and retest that level. If that happens, we'll have our third touch on this trend line or zone. And as many of you already know, the third touch is often where we can expect a potential reaction or reversal. That means we could start seeing price rejecting from that level and possibly heading lower. But just to be clear, this is all on the daily time frame, and things can take time to develop. So we're not jumping to conclusions just yet. We still need to pay attention to what the lower time frames are showing us before making any decisions. Now, switching over to the 4-hour chart, and to be honest, there's not much going on here for now. The structure is a bit messy, there's no strong trend, and price action looks more like it's consolidating. So from a trading point of view, there's really no clean setup to work with just yet on this time frame. So let's go one level lower, down to the 1 hour. This is where things get a bit more interesting. Around this area, we can see a buildup of volume, and this kind of consolidation usually creates a liquidity zone. These are the areas where smart money likes to trap retail traders before making a big move. Typically, once price takes out liquidity, either above or below, it tends to reverse and move in the opposite direction. In this case, we can already see that price has tapped into our area of value and rejected it slightly. So far, we've had 2 clear touches to this level, and now we're waiting to see if the market is ready to give us that third move. If this plays out the way we're expecting, we might see price drop from this area, potentially down to this previous low right here, which could act as our next target zone. From there, if the market continues to respect structure, we might get a bounce, and that could lead us right back up toward our main liquidity target at the top of the daily range. So overall, the idea is this. Price could make a short-term move to the downside before continuing its longer-term push back up. But we're not guessing. We're reacting to what the market gives us. As always, we wait for confirmation. No need to rush in. Let the setup form, manage your risk, and trade with a plan. And that wraps up this week's market forecast. We've looked at gold and Nasdaq, broke down the key levels, and discussed possible scenarios on both the higher and lower time frames. As always, remember, patience and confirmation are key. Don't rush the entries. Let the market come to you. If you found value in this breakdown, drop a like, leave a comment if you've got any questions, and don't forget to subscribe to the channel for more weekly updates. Stay sharp, stay disciplined, and I'll catch you in the next one. Peace.